In this video, we're looking at Warner Brothers Discovery. We will look at their recent quarterly report. We will look at their revenue, their EBITDA, their free cash flow for the quarter and for the year. We will also look at what management is projecting for 23rd year and 24th year. We will also look at their direct-to-consumer business, their subscription, what is the growth rate in this segment. We will look at their debt level, so how much they were able to reduce their debt in the recent quarter, and how management is projecting to reduce their debt in the next years. And in the end, we will update our fair value calculation for WBD stock to determine what kind of upside the stock offers and if it's a good buy after the recent report at this price level. So let's get started. First of all, if you want to get updates about WBD, please consider subscribing. Okay, first let's look at the price performance from year to date. We can see that the stock is up around 65%. This is much better than competitors, Netflix, Disney and Paramount. We also can see that right after the report, the market reaction is neutral, so the earnings results are mixed. If we look at the larger time frame, for example for a year, the stock was just hammered. So I saw a lot of analysts start selling the stock. The economy outlook, advertising spending, too much debt. And this is exactly the moment when the stock had 65% increase for just 2 months. So I prefer not to focus on the economy outlook, but on the fundamentals of particular company. So now let's look at the recent 10Q report. The report was released on Thursday. Okay, so as I said, the results were mixed. There are positives and negatives. We'll get to that in a second. First, the revenue. They posted a revenue of the fourth quarter of close to 11 billion. This is slightly lower than analysts were expecting, around 200 million lower, but within the range of expectations. They also posted 9.2 billion of EBITDA. EBITDA stands for earnings before interest and tax depreciation amortization. Management in their guidance pointed to a figure of 9 to 9.5 billion. So right in the middle of the range of management guidance. They also brought 3.3 billion of free cash flow. In their guidance, previously management pointed to 3 billion figure, so slightly higher than management guidance. So overall, I can see the results positive. Slightly miss on revenue, but overall within the range of guidance. Okay, so these are the financial results for the quarter. So what are the projections? What are management projections? So previously, management projected 12 billion in 23rd year. Right now, they lowered their guidance to 11 to 11.5 billion. So this is the exact text from their earnings call transcript. And EBITDA projections are extremely important because the fair value calculations that I'm using are based on these EBITDA in 23rd year. So these results were disappointing. And the first question from an analyst from Bank of America was why management lowered the guidance. So this was a decrease of more than 500 million. So in the end, when making the projections of fair value, we will return to this number. So this was on the negative side. What was on the positive? I really like their direct-to-consumer business. Right now, the direct-to-consumer business is still unprofitable. But according to management, the next quarter will be the first quarter when their direct-to-consumer business becomes profitable. And what's even more important is that in 2 years, they're planning to make around 1 billion from their direct-to-consumer business. So this segment of their business can not only to become profitable, but even bring 1 billion in a couple of years. Also, they increased their number of subscribers around 1 million from the previous quarter. I saw Disney and Netflix gaining more subscribers at a faster rate, but WBD is launching, I believe in April, their combined service. So it will be very interesting to see how this plays out. Also, another positive news was the rate of their debt reduction. So right now their gross debt is around 49.5 billion. Their cash is 3.9 billion. So this brings their net debt to close to 45.6 billion. And their net leverage, so this is net debt divided by EBITDA, is around 5. Also, management provided their guidance of the leverage in 23rd year and 24th year. Management also said that they are planning to reduce their debt to 4x in this year, to 4x, and to 3x in 2 years, in 24th year. So let's combine all the results and the projections for the next years in one table. So for the previous year, we saw EBITDA of 9.2 billion, the free cash flow of 3.3 billion. So this brings the free cash flow conversion to 36%. Management said that the free cash flow conversion will be higher in the next years, even up to 60% free cash flow conversion, a very dramatic increase in the conversion of free cash flow. Their gross debt is 49.5. In this case, their gross debt, this is not their net debt ratio, this is gross debt divided by EBITDA, is close to 5.4. In 1 year, management is saying that their EBITDA will be from 11 to 11.5 billion. If we use the free cash flow conversion of 42%, this brings their free cash flow of 4.75, their gross debt to 45 billion. In this case, their ratio, the leverage ratio, will be around 4x. And in 2 years, if their EBITDA is around 13 billion, their free cash flow conversion is 50%. In this case, their free cash flow is 6.5 billion. Their gross debt has to be around 39 billion to make the leverage ratio of around 3. So this is in line with what management is projecting. Okay, so we looked at their financial results for the previous quarter. We looked at their revenue, their EBITDA, their debt level. So let's update the projections of their fair value. So here are the previous projections. So these were before the fourth quarter results were available. So some of the numbers changed. Again, these are not the current projections, but the previous projections before these results. So the fair value was close to $32 per share. So now let's update some of the numbers. So here are the current projections. Again, we have updated their EBITDA from 12 to 11.3 billion. Their leverage multiple is projected to be 4. So this is gross leverage divided by EBITDA. Their free cash flow conversion, I took 42%. This implies their free cash flow in this year of around 4.7 billion. I use the EV to EBITDA estimate of 10. This is on the low end. If you look at the chart of EV to EBITDA of Disney, Netflix and Paramount, they are trading at much higher EV to EBITDA multiple. So I use 10, this is on the conservative side. If we multiply their EV to EBITDA estimate by their EBITDA in 23rd year, we get the enterprise value of 113 billion. If we subtract debt of 45 billion, so this is not the current debt, this is debt according to management in 23rd year. So again, not the current debt. We add back cash, I took the current cash. We get the market cap of close to 72 billion. If we divide by the number of shares outstanding, we get the fair value of WBD stock of close to $29.5 per share. From the current price of $15.5 per share at the moment of running the video, this implies more than 90% upside. So even after the run-up in price of around 60% from year to date, the stock still offers significant upside potential. Also, if we use the current market cap of close to 37 billion, at the moment of running the video, the stock offers a relatively high free cash flow yield. Okay, so we looked at some of the numbers of WBD. We looked at the recent quarterly report. We looked at their revenue, their EBITDA, their free cash flow, what management is projecting for the next years, their debt level, their direct-to-consumer business. I was really disappointed by their EBITDA estimate for the next year, but overall, even after the run-up in price, even with lower EBITDA estimate for the next year, the stock offers still a significant upside potential. Also, if you want to know more about recent purchases of super investors, here is the video. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end and see you in the next video.